course last week. We are live now. I don't know how your trading is going. The name that wasn't in our class last week was Julius wasn't in our class last week. I don't know if Chidebre was in the class last week. So can you guys please introduce yourself one more time?
Okay. Hello, good morning.
Good morning.
My name is Julius. I was in the class last week. I just registered, I think, a couple of hours ago. Yes, I've been in the trading space for like, I think, 3 years, but I've not really been profitable. I'm still trying to hold on to something, specifically a good strategy, if I may say. I'm an accountant, actually. Because are not really an issue for me.
As an accountant, you're supposed to be doing well in trading. You guys are good at mathematics. We struggle to even understand trading in mathematical aspect because I hate mathematics. It's not that I don't like it, but it disturbs my brain. Yeah.
But for me, timing. I really, maybe my work has eroded me so much that I don't even have time to even practice or focus on trading at the moment. I work in an audit firm.
Okay, perfect. So our method of training, we understood the market, the problem in the market. The problem in the market is not that people are not trading, it's that people are not making profit. So second problem people face in the market is lack of capital. So we try to solve some of them because business is all about solving problems. It's not you know what I mean, providing solution, identify a problem and solve them. So we try to like intense our strategy or pinch our strategy to the point of just making profit. So personally, what I look for is a way people can make profits, not necessarily drawing draft for you, to give you hit where you can make the profit. Because, do you understand? So I think you're in the right place. If you follow some of the things we will be giving you, you may discover that you will start making profit. Then, secondly, we once in a while provide capital. This year on is another one, but it's going well. You guys are going to be more profitable because we have discussed with our team to make sure the condition on those funds will be okay, at least to increase the daily drop, the drop down, not daily the drop down, because anytime we provide capital, last year capital we provided was 20% drop down. It means if you lost 20% of the money, we will not give you access to trade the account. But this year we want to make it maybe 10% or 12% because it's up to $10,000. And those accounts are real accounts because it's connected to Imagine. So now we try to solve the problem of capital so that, let's say, instead of you to start trading with $200 or $100, try to struggle with it, you could start on a margin of $1,000 and or $3,000 or $10,000. Then even if you're making 3% profit per trade, you can be able to scale up and you see that you are now becoming a profitable trader. Do you understand? So which person will I can only introduce only two persons. Let me look for familiar people that are not familiar. I don't know if you are with us, Chidebere. Because of time, it will only take two introduction. Chidebere, are you with us last week? Okay, obviously you're not paying attention. Maurice, were you with us last week?
Good morning, sir. So I'm just joining today. Yes, sir. So I'm just joining today. I'm the lady that joined your live yesterday that told you that she just paid.
Okay. Probably, are you a trader or you are just starting to learn how to trade?
No, I'm not a trader, but I've been learning for a long time. I've been doing like a personal training, but I just needed like more of a mentorship because even after learning, I still couldn't trade. I still couldn't like find ways to start trading, like have a better understanding. So I just realized if there's any mistake, if there's something need to have. So that was why I now joined.
Okay, perfect. I can see almost all of us are on the same level. Some of us have tested trading, either in demo or something. So I understand the level of our knowledge. So that is helping us to know how far we can, how to strategize our teaching to make sure we give you what you are looking for. And please, I want to appeal on something. If you want to learn on training, make sure that when you are anywhere you are connected, you just pay attention to avoid you missing out. You know what I mean? There's no difference between learning online and learning physical. It's just all our mind, how we structure our mind. You know, for me now, I'm in a class, I'm very busy. I don't want distraction. Even if somebody walking here, I will give the person a sign that I'm in a meeting. You know what I mean? The same way you could be able to like put yourself together to avoid unnecessary distraction, so that you can be able to get value. Okay, so going further, last week we discussed on risk management. I call it risk management application. So we use the concept of margin, free margin, and equity, then and leverage. Then we try to discuss how they interrelate. Then we also use loss volume or loss size to balance it up. But a lot of people find it difficult to understand it. When we started asking questions, try to know whether they catch the teaching, we find it difficult that some small. So the class was very quiet. And anytime class is quiet, it means that something is wrong. You know what I mean? Then we also discuss about market potential opportunities. We analyze buying of oil we analyze the buying of Euro USD. I don't know if anyone can bear me witness. That was last week, throughout last week. So we also analyze buying of gold. We also analyze buying of gold. So gold went up last week, but it didn't continue. So around Thursday and Friday it dropped. But our analysis still holds strong. Our analysis still very, very valid. We will never invalidate it until the analysis, the rules and regulations we follow collapse. Then we can kind of invalidate our analysis. So then we analyze selling US Canada. It has not triggered, but let's keep it as it is, because based on the trend, the market has been trading for a long time. This is one of the analyses that have not been triggered because we are using a non-farm payroll and the Canada unemployment. Then we now use support and resistance. It was support and resistance that we used to make this analysis. Then we said on two areas, if US economy is strong and Canada is strong, then we should avoid two of them to avoid issue, because one will definitely take the lead. Then we also analyze buying check. So these are the signs that we put in. That was last week. This was where we analyzed it, and the price is already going accordingly. We also analyze selling this one. It has not triggered. This is which currency is this? This Euro card. This one has not triggered. Then we, of course, analyze buying oil. Oil has triggered. It has gone up from 71 to 73 since last week. I don't know if some of you are on it, if you are actually trading them. That was what we analyzed. Let me hear you out. If you have any challenge concerning the trading of last week, then we could go ahead. We just have 4 minutes. No, Euro USD wasn't sell. We analyzed Euro USD to be buying. We consider sell on level of fundamental, but technically we're expecting a push. And for about that was upper week self, fortnight ago. Since then, it's been going bullish. Even if you may drop it, for now, for the past 2 weeks, it's been up. This week, it will also remain up. On a long-term analysis, dollar will dominate euro, but that's not exactly what market trading is all about. Trading is all about buying and selling low and high, and also buying at a higher price. In the sense that you can enter trade before the event. You can enter sell before the market dropped, or you can enter buy before the market rises. So it's not when it's now up that you place a buy, or when it is now down that you place a sell. That's why even if there's a system or economic structure that gives strength to dollar, which obviously was the election and other stuff in America, that may be something that will come up tomorrow that will assist euro to rebound. You know what I mean? They will assist euro to rebound. So because of that, we emphasize strongly buy on euro. Now, these are the reason. Get a point. Get a point. These are the reason. So euro USD is oversold this point. One. So it's oversold, and as what we call sniper entry here. We said this buy analysis can only be invalid if this point is broken. So we are all looking within the Eurozone, anything that can push it up. So some of us place a buy here, some place a buy here. Then even last week, the euro dropped a bit, but the long-term buy is still on effect, because there's more chances that this market may shoot up anytime. You may just wake up and see that the market has gone up, and much less chances that it will continue dropping. But on a long-term range, dollar has more economic event than euro. But this point is, assuming you will be selling, believe me, when the market was here, the market obviously has gone up. So we analyze buy on a short-term range, then we analyze sell on a long-term range. Do you understand the two? So now it depends on how you want to go about it. So if you follow the trend, the market has seriously dropped, seriously. The next move could potentially be uptrend. But if you want to remain trading on that low side, then you make sure that your stop loss will be very, very average. Like your stop loss should be, your stop loss on the sell shouldn't be much. Although I will discuss that one with you. Your stop loss shouldn't be, the highest price of stop loss should be 1.16. But I will give you the reason. Don't put stop loss very high, because the market that is down has more chances of rising than falling back again. And the market that is up has more chances of dropping than rising again. Remember, you are trading a volatile, a liquid asset that has more liquidity. So there's chances of the market going up or coming. Once any of the asset classes down, it has chances of going up. Or anything can happen at any time, and the market will shoot up. That's why no analysis can be 100% accurate. No matter what they're analyzing on the US economy, anything can happen tomorrow. The market will just go up. Do you understand? So one of the strategies you will use to learn to be a profitable trader is to, be greedy when others are afraid, and be afraid when others are greedy. When people keep selling, start pushing your buy one after another at that lower price. Remember, you will trade based on rules. Those rules is what guide your emotion. In case you have forgotten any of our rules, you just always call my attention to it. You need to know, guess a strategy or a tips, what you look out for to be a profitable trader. Do you understand? So I was asking, let me know if any of you is trading, and how was your market. Did you make profit last week? or do you still have thread that is running on? If you have, what is the thread? What is the pair? Let's open it and check what is happening.
Hello, Mr. Uche.
Yeah.
Okay, my name is Felix. Good morning, sir. Sorry, I didn't follow you throughout last week. I was having a training in the office, but I was watching the videos. So,
Okay.
for those of us who are just still learning to trade, we are still having fear entering the market. So even if you have done analysis for us, I don't know, there is still this kind of fear. Like this pair that you mark now on the chart, and you say sniper entry and the rest of them. Yes, we know the zone to enter. But sometimes we are still scared to enter the market. So last week, after for the oil trade, I couldn't set up I didn't enter the trade on my funded account. I don't know whether it's fear or I couldn't set up the account. But I entered the trade. I was like testing it on some other accounts where I have small money, and the team made profits. So I was like, if I had known, I would have entered it.
See, you know one thing. Why we provide those funds is so that you won't be afraid again. Remember, it's not even your money. That's actually our money. He paid us for training, so that's why it is part of our. We have made some cumulative revenue, so we're gonna have to like set up allocation, try to allocate fund for people who are learning. Do you understand? Now, to make sure that you wouldn't think, you wouldn't be afraid of it again, and you wouldn't be emotionally attached to it. Do you understand? It's like demo, so that it can just be free and trade it. And that's how you can make money easily, because fear and emotion is one of the major problems facing a lot of people. For example, even as experienced I am, despite my risk management models and everything, if all the fund is mine, it gives me tension. But if the fund is not all mine, it doesn't give me tension. So I take my time and trade them. So that's why you shouldn't be afraid to trade that money. To be honest, it's even the time for you to even hit it big, because there's nothing much to lose. You paid for trading and they give you free account to trade, and you can withdraw 70% of the money. So why are you afraid?
Sir, we are afraid because of the drop down.
Yes, all those kind of things.
Yeah, so the drop down is what I'm teaching you. I'm a portfolio manager of a big firm, trading venture capitalist fund. Do you know that no matter all whatever we are doing, we don't take up to 3% risk? So there's no reason why somebody is telling me that 10% drop down is big. We don't take up to 3% risk. I'm trying to tell you that if I'm trading an account of $1,000, check my profit margin is $30, $20, $30, because of that's the target we are targeting on each account, 2%, 3%, 2%, 3%. It's been there for years. That's how we trade it. So in a month, we could make, let's say in a week, if we have 5 trades and gain all of them, that's $30 times 5. So it's as simple as that. It's not something difficult. So put your mind off this. Use statistics to trade. Like, you know what I mean? Draw the plan properly and use them to trade. Do you know what is making like $20 per each trade?
No.
Like 2%. That's what is called scaling up. So you can't make it to one trade. And yeah, that's sometimes you can make a one trade, one big trade, you just enter, you drop 30% out. You know what I mean? But that kind of trade does not scale. We're talking about a systematic approach where you can scale up. Yeah, you know what I mean? For example, if you keep making that money like that in a week, times 4 days, that 4 times a week, that would be like average $80 profit. Before you know what's happening, then your sources can be predictable. Somebody can even say, okay, this is a success range. Let's give you $10 million and let's see. You know, that's how you scale in any business. You must be able to put yourself on a plan and gradually scale. That's also how you notice your failures. In case you do it didn't work. So my business is not working well. We're not making profit. Do you understand what I mean? So
yeah,
avoid this fear and just follow it. Remember, I told you anytime we are trading, ask yourself, why are we trading? That's the most important thing. When we put a stop loss, you ask yourself, why do we put this stop loss? It's also a second most important thing. So we don't want you to buy or sell blindly. You need to know the reason why we wanted you to buy, wanted to sell, so that you mark those reasons. Then it will help you to start making your own personal analysis in the future. Is that all right?
Okay, yeah, thank you very much. But we still want to plead, I beg, while doing the analysis, please try to show us where we enter, especially if it's like on a 1 hour or H4 time frame, or there's any indicator that can help us apart from this. You know, your analysis is always done on a higher time frame, like weekly or daily.
Yeah, because that's the best one that can give you profit. Short time frame can never.
Okay.
Yeah, the best time frame that can stabilize the emotion and trade, that help you know where the market is going on a long range, is long time frame, because short time frames can give you immediate reaction. You may think that the market has gone the other way around, only for you to know that it has gone off.
Okay.
Do you understand? So that's why we prefer the fact the least you can give is 4 hours. That's the least. We can't encourage you to trade 30 minutes or 15 minutes. No. Those ones, a lot of indicators can be broken. A lot of demand and supply can be broken. Anything can happen on those short movements. You don't understand? So long time frame is the best. Some of you are also working class, so long time trade is also one of the best for you, where you can place trade and allow it. Like I'm a weekly trader. Imagine if I get one week and the state that just shoot up on oil, and that would be almost like 400 people. Then multiply that the volume I'm using. It's a lot of money. That's how to make profit. Let me refer to my friend that said that he's trading for 3 years. He has not made profit. What is his name? I think Julius. So the system you will use to make profit. All these things is how to make the profit. If you want to capture every moment, you make profit. You end up like gambling, and it start affecting your emotion, affecting your time. You won't be able to have time for other things because some of us are trading manually. Unless if you are using automation, then automation can do the job for you. Do you understand? So now, I can see that some of you are still afraid of trading your money. Okay, so before I go into fundamental, let's finish what we are talking about last week. Because why you're afraid is because of risk management. You don't know your risk. If you know your risk, you won't be afraid. It happened to me, but let me use practical example. When I started flying around 2011. That was my first flying experience. So, do you know, anytime the plane take off, I always feel afraid, especially during turbulence. I don't know if some of you have experienced that.
Yes,
yeah, I always feel like scared what is happening. And that was not what I had in mind. The flight experience was all about. I thought, as I used to see it from ground, that everything is all about, flexing. I do know that it has some scaring, So one day when I landed, I asked somebody, why does this turbulence happen in plane? He told me that it's just like normal waiting. But one day I was privileged to meet a friend who's a flight attendant with earpiece. A flight attendant. She explained to me everything. In fact, now told me that the most important time of flight is that takeoff and landing. Well, for me, I used to feel comfortable once a plane is landed. I say, thank God, at least let me land and have my peace of mind. But she now told me that that's even the most critical time, the landing time and takeoff. Once the plane has taken off, that I should forget it. That all this does not matter again. Now my psychology and fear about those things reduce. So even if I see turbulence, I just, you know what I mean? I just relax my mind. It doesn't shake me again because I've already know that it does not have much risk. The risk is even more. She told me that the risk is more in takeoff and landing. That's where the major risk is. So do you understand now? So now that is the same thing in trading. If you know your risk, so you see that you no longer be afraid of some certain things. So you be careful following those risks. And one of those risks we discussed was risk of margin, risk of free margin, and risk of APT. Then we did a practical on it. So it was recorded. So we may not be able to start doing that all over again because of time. But the recorded version is there. I will encourage you to dedicate a time, buy a bottle of beer. If you're a Muslim, you buy a bottle of juice with some suya and stay somewhere. Have it in mind as if you are in a class with people, and digest all these things. It will help you to get a point, so you'll be able to understand what we discuss. So today we are trying to go more into it to discuss how to apply that risk on price movement or PIP. How to apply those risks on price movement and PIPs. It will be very practical, so just pay attention. Now, let's make it easy. Let's assume that all of us are trading with $1,000 capital, because that's the least amount we give out. And I believe majority of our students are on $1,000 capital. And now we are to trade on 2% risk. Please, I give assignments, I give a research. Try to find out what the broker you are using, their volume is per trade. It's a simple thing. You can even ask them a question, they'll tell you. Now, let's say on Forex, I don't know, let me use Forex instrument, FSP. 0.2 will be 20 cents. 0.2 will give you 20 cents per movement. You know what is 0.2 on volume? That's lot size. It will give you 20 cents per movement. Then you place a trade, and the target, please stop drawing, Ruben, so that you won't distract other people, please. If you want me to zoom it, let me know. I can zoom it to make it bold for you. Now, let's say you place a trade and you put 200 pips target as a stop loss. Now, you have to calculate 0.20 times 200, which will give you $20, I think. Let me be sure from a calculator. Which will give you $20 loss, profit. $0.20 times 200. Okay, no, $40 profit. So, which will give you $40 profit. And this $40 is 4%. Then 0.10, we mean 10 cents. Then if you target 200 pips, then it will give you $20. This thing can also work both in loss and in profit. Let's say if you target it on a loss, but that's where I'm going. Before you put a stop loss or select your volume, or take profit. That's what you have to do is called price actions analysis. Please take note, price action analysis. That price action analysis is to try to know the average. It's also part of our data analysis anyway. Average price movement of the particular instrument you are trading. One, average price movement. Two, try to be sure you are buying low and selling low. So you are buying high, and selling high, and selling low, and selling low.
No, you buy low, you buy high, you buy low.
I don't know, probably because I've not taken coffee. My brain is not open.
No, we buy low and sell
Ye-
high.
We are buying low. Yes, that's what I said before, but my brain shifted. And selling, you are buying high, not you are buying low and selling
And selling high.
Selling high. Maybe I have to go and take coffee. Two, I will show you this one. Don't worry, but try to be sure of those things. These are what you ask yourself, which as if you are meditating. You have to observe support and resistance. Then another one, supply and demand zone. Then you can now maybe consider technical indicator. Remember, I did not even add news. If I didn't ask to check if there's fundamental moving it, because after rain comes sunshine. So even when there's fundamental moving the market, do you understand? So after the fundamental, you also have to observe those things, because it can't tell me that dollar is good or euro USD is good to buy and the price is good to sell and the price is very much low. I mean, you become my first suspect. Do you understand? There's nothing you can tell me about it. That is law of trading, law of business. I have to buy it at a lower price, sell it at a higher price. You can't tell me that that oil price is good to invest in, and I check the price of oil is low. It's even below the country's benchmark. He asked me to go and invest on it, like to go and sell it. I'll be asking you how, no matter the economic analysis you're giving to me. Do you understand now? Because I have to observe those natural laws, because economic news are influenced by economic policies. The demand and supply are influenced by people. So you could make a policy and people will refuse to act on that policy because probably it's not good for them. Then the market will not react. Why the market may react even without your policy? People may see a good opportunity and react on the market. Don't understand the market psychology now. On that aspect, you could draw a plan and people doesn't want that plan. So investors refuse to act based on that plan. Do you understand?
Yes, we understand.
Yeah. So now, somebody made a noise, so I have to move to the person. Please make sure you're in a very quiet place. So now that's why I consider average price movement. Be sure you are buying low and selling high. Please crack this in, because I'm going off this screen and it will be wiped, so that you can remind me all of them. Observe support and resistance, support and demand zone, and technical indicator. So I'm going back to chart now. Let us practicalize it there. So now we said observe price movement, right? So first of all, let's do everything on the chart. For the sake of time. I think this would be a perfect example for what we want to do. We can also use Euro USD. Now, let's start from Euro USD. We said observe price movement, right? So from here, we can easily observe it without doing too much of data analysis of the market. So you ask yourself, what is the average price movement of Euro USD? At what point does Euro USD usually reverse, like go up or down? That's what you mean by observe price movement. So now you may discover for a long time that the average price of Euro USD is around 300 to 400 pips average before it will reverse. It's only after this Trump election that the market changed. The market hit up to 800. So the price movement of Euro USD, let's start from since 2009, has been from here, that is 400 pips. If you count from here, that's 400 pips. You count from here, that is 269 pips. They're the same. Then you count from here up. That's 455 pips. Of recent, that the market hit 800. 879 pips. Here, on card or on a card chef, you see that from here, from let's say since May, the price go up. That's average 180 pips, come down 130 pips, go up here 116 pips. Of course, come down similar average. 135 pips. This was the highest to 200 something pips. So we can say average movement is 150 pips up and down. Do you understand? So now, an average movement on Euro USD is, okay, let's just approximate it to 300 to 400 pips average, because this thing happening here is a breakout. It's not really based on the market. There's a breakout here. What happened on Euro US is a breakout. Do you know what is breakout? Make sure you understand what I mean by breakout. Here is called breakout. It's a breakout. Breakout means the support broken. So the average movement got broken after the Trump election. So we can never, we won't be able to establish a strong strategy using it because it was an event that happened. Do you understand now? So breakout means something broke the normal price movement. Observe the average price movement of any of the currency you're trading with. For those of us that trade oil, Julius, you mentioned of oil. Then you could see that for a long time, all these assignments, you can do them on platform. You may not even need to read some strong data to get them, because from mere looking, you could see the movement. Then we can say from, let's say from here, from 0209, that is around September. This is the price. This is the lowest, 70. And this is the average height, 77. Because I'm not using the highest height. Do you understand?
Yes, it's clear, sir.
So I'm not using the highest. So, and I'm not using the lowest, which is 68. Now, on this note now, if you are to buy oil, when the price is at 70, which is here, and it has not, to 68 is about, to 68 is about 200 pips. So now, if you put your stop loss at 200 pips, and they're using 0.01, remember, it's different from currency. That means you are expecting to have a loss of $20. Do you understand? Then, if you place a trade on, let's say you buy oil, a Euro USD now, and the Euro USD is below the lowest since 2003. So since 2023, which is here. Here is the lowest. I mean, like here was lowest, and the price broke. Even if this market keep falling down more, you put a stop loss at 200 pips or 300 pips. So you will have minus $30 using 0.10. Then if you put a take profit using the average of 400 pips, you will have plus $40. Do you understand? Now, let me explain something to you. I already know that if oil goes up to, let's say, if Euro USD goes up to 400 pips, it's most likely going to reverse. So anytime on this analysis now, I will avoid anything that will make me put SL at 100. Because of I know that the market can go on a strong range more than 100 pips. Why? Because I've observed the movement. That's average movement. At what point does it always reverse? At one point does it always go up? Do you understand now? So now, what I will do is this. Let's say I place a buy and the market goes against me minus 100. I may consider buying again, even if you go against me minus 200. I may consider to buy again. I'm coming on. You need to get my point clearly. Now, if I use 0.05, remember we are talking about 0.10 to place my first buy, and I put SL. This is 300, which is because of I've seen that that's the average. So what my outcome will be like 15 minus $15. So remember, I'm not planning to lose the money because I'm using price action average. Now, on this minus $15, remember the market has gone 300. It's most likely going to reverse. Even if it goes to 400, it may hit minus 20. And remember, that minus 20 is just 2%. That minus 20 is just 2% of my $1,000. And this thing can happen within 1 week. So it's not that I can't wait. No, some people don't have patience. It can happen within short period. The market can go 400 pips. That's just 2%. And I've not, and my total drop down is even 10%. It means I'm even like of more advantage. Now, I will place another buy again. Please don't get us wrong. You know, we are discussing risk management. That's why we're talking about much of loss. Try to understand the topics on risk management. Now, I have my reserve 1 lot, or even maybe I can 0.05 reserve, or I can even make it 1.5, which is like 0.15 reserve. This minus 300 is most likely going to reverse my market. Then I will place another buy with this point, either with the same 0.05 or 0.10. So now I'll be having total of 0.15 in the market, which will be giving me about 15 cents per movement. You may think that 15 cents per movement is small until you see that the market keep going against you to $50, $30, $80. You now know that thing is not really a small movement. Then you may also see that until this 15 cents gain $30 for you, $40 for you. Then you see this 15 cents now. I bought again at a very much lower price, above my first entry. And if this market started going up, I'll be making 15 cents per movement. And if I have 15 cents per movement, 0.15 times additional 300 pips again. That would be about $30, right? Am I right? I'll gain $30.
No, sir, I think it's about $45.
I'm taking in 0.15 times 300. Yeah, 45, perfect. Then that would be $45. So the $45 now, how did it come about? I'll be having positive. I'll be having positive of about $30 there, and the recovery of about of 15. I guess of about $15. I'm just approximating because of it may not be exact, about $15, because the other 0.5 is now recovery, while the other one is on profit. This is how you can manage the risk. I don't know whether this analysis is very much clear. Now, on this note, you may discover that the market has traded for a very long time, despite this turbulence of losses, and yet you have still never reached your drop down. This can happen in the whole 3 weeks, the whole 2 weeks. Even if it happens in the whole 1 month, it may end up coming at $45 profit, which is about 4% profit. And it's far better than having a loss. Then my second topic I say you should consider is what? Can you remind me?
Buying low, selling high.
Perfect. Now, I just said this now. Your mind may be asking you, what if you continue going down? Remember, I'm going to buy it at a lower price where I have chances of gaining. Understand? I've considered the price action, so I'm not trying to do the guesswork. So I'm going to place this trade at a low price where if I hit the first one, if it not go, if I hit the first entry, if it did not reverse within that point, if I hit second one, it has chances of reversal, because obviously if you see a lower market that is very much low, first low, second low, if second low didn't go, the third low will go, which is the highest risk. Now, I don't want to use market as going on the particular trend, like US card is going on the particular trend. I will discuss on this later. The market going on a particular movement, like gold. Gold is going one particular direction for a long time. So it's a different analysis you could use. Let's use practically this one. Now, I say buy low, say high, right? So what is the lowest of US card chef? This is daily chart, so you won't think that it's a long time chart. Now look at it. It's daily, at least once in a day. This is since April, no, since October. Sorry, since August rather. What is the lowest?
Around 0.61, 0.61 something, between 0.61 and 0.62.
Yeah, within this zone is the lowest. Then within this zone is the highest, right? It's as simple as that. So now, and if this the analysis I demonstrated for you is on card chef, and I placed my first buy, let's assume I saw the market here. You remember we saw this market here last week. I don't know how many of you that was in trading with us. We saw the market here last week. Then we marked this thing for buy. Then assuming I saw it here, I placed my first buy. Here now is the lowest, and within this point is also considered average lowest. Then I put my stop loss here, or let me use the analysis we made. Let's say if I place a buy here, then let me say that remember the average movement of this market is about 130 pips. So let's give it 120. That's average. When we check the price movement of this instrument since May, since August, that's almost like 4 months now. It goes 140 pips. It goes 130 pips. So average could be 120. So now let's say I want to put a stop loss of 100. My stop loss of 100 is here, 0.61278. That's my average here, about 100 pips. Even if I put it 200 pips, which is around here, it will be very much difficult to get there because that have not been the range unless there's a breakout. Do you understand what I'm trying to analyze to you? Now, I have observed the market movement, the price action movement. How does it move? What is the highest? What is the lowest? And how has this lowest happened? Remember, market movement happens in 4 quarters. Quarter 1, quarter 2, quarter 3, quarter 4. Take note, first quarter, every 3 months, market change. Do you understand? So let's say I place a buy here. Even if I put my stop loss at 200 or using the average, maybe 150 pips stop loss, I'm of more chances of gaining than losing. That's why I say buying low and selling high. I put my first entry buy, and if peradventure this market came down again to this point, and I place another buy, I'll place another buy here. I will have chances of gaining it. Then I'll put my stop loss very far from here. Then my stop loss will be in line, in confirmation, will be in conformity with my volume. Because even if I put 150, I have to calculate 150. I have to calculate 0.5 times 150, which will give me around $23 loss or $23 profit. It's as simple as that. So on this note, you will see that you are trading, each trade you are placing is on average 2%. Average 2%. Average 2%. Then if I place this buy and the market is going up, I've already seen that the average movement on the rising side of it here is the highest. So I may put my take profit here. I may not want it to get to the highest because there's no chance that it must get there. No market wave goes like that, and there's no guarantee that it must be hitting that point all the time. So that's why I'll put my take profit before this highest level. That my take profit can be something. That my take profit can be 80 pips or 100 pips. Since the highest so far is 135 to 140, I will not be targeting the highest. I can targeting 80 or 100. Sometimes I'm even target 50. Those 50 pips is like you have more chances of hitting it or even getting the peak and leave the market. Remember, I'm buying at a very comfortable price, and I'm buying at also a very low price. Like the price movement I'm buying is the potential price where this market has capacity to reverse. The one I'm selling is at the potential price where the market has capacity to go up. Then I'm also following the price actions. This is how it has been moving. Let me ask you a question. I don't know who's Igbo here. Who's Igbo here? Chidera is Igbo, I think. Who's Igbo here? Overcomer is Igbo, right? You know, I'm talking about, Igbo people like to trade market. They like more of buying and selling. Like they are more of in commerce. You know what I mean? Now, let me give you an example. Let me ask somebody, let's say Chichindo, question. Let's say you are buying, what is the major trend now? Let's say you want to buy, let's say iPhone. Let's say you are into phone dealership, iPhone, and the iPhone 16 is selling us at 100,000. That is what people are selling it in the market. So you may see someone that can sell at 110 or sort of 102 or 101,000. Maybe the customer did not consider, just buy. Or someone that may sell the least 98,000. Do you understand? So it means the price movement of iPhone is between 98,000 to 102. And but the actual price is supposed to, people are selling, the common price is maybe 99 to 101. So it means the 100,000 will be the pivot point at the center. So somebody can sell 101, somebody can sell 102. Or someone can sell maybe 98, someone can sell 99, depending on how they want to move their market. At what price would you like to be taking profit from the iPhone market? And at what price would you like to be buying? Since that is what you have seen people are buying and selling. Or let me ask you another question this way. So if you see that the market, somebody is offering you to buy the iPhone from him, maybe at 110,000, would you like to buy it?
Not likely.
Then at what price would you like to be buying the iPhone and selling the iPhone?
Around 100,000 or below.
Simple. Because of that has been the average. So this will help you to have a proper risk management. When you see that average price movement of this particular market we are trading now is between this price we marked I'm deleting some of these things. So is between this area. Here is the major point of buy, and at this point, which is this price, is the major point of sell. Here was the highest. So we have already established a fact that it's good to buy around here, and it's good to sell around here. Then you may not wait until this point for you to take your profit. You can be taking your profit at this point. Then when you want to set your stop loss, you can set a stop loss of this zone. Let's say you buy here. So assuming this market hits this point and you place a sell, you may put your take profit away from this highest resistance. Yeah. But in a situation, if your take profit is very much bigger in pips, remember, you have to consider reducing your volume so that your volume value in dollar will be in line. Look at what I mean. For example, you want to put a stop loss up to 400 pips. You want to put a stop loss up to 400 pips or 500 pips. One, you will try to consider reducing your loss size because of you are going on a long-term stop loss. You have to consider reducing your loss size, maybe to 0.03, because we are going for a long range of stop loss. All this will help you to trade between your risk and dollar value. Let's say, should the market keep going against you up to 400 pips, you will also discover that 0.03, which is 30 cents times 400, we still equals to maybe we see equal to maybe, let me put it in percentage, minus 2%. Despite that the market has gone 400 pips. Now, what I'm trying to establish here is that make your calculation. Make a calculation before you place your trade. Do you understand? So don't place trade just by assumption. No, you make a calculation before you place your trade. Now, where you're going on a short movement, you properly, when I say short movement, also make a calculation using that. Let me tell you something. Even when I want to put a stop loss of 30 pips, let's say I want to increase my risk. I want to increase my volume, but I will not increase my risk. Let me repeat that one again. For example, you want to increase your volume or lot size. Yeah? Don't increase your risk. Don't increase your risk. Do you understand what I mean? Now, for example, I don't know if it was Overcomer that made that statement last week. He said, where you want to gain big money. So that was how you made that statement. How can you use 0.01 make that kind of money, or 0.0, small volume? For example, let's say you don't want to be taking maybe long trade, or you don't want to consider those things on risk management. You just want to pick return. Then that made you to increase your volume, maybe to one lot, because some of us that has big leverage can use one lot. And this one lot will give you $1. That means you are going on a high risk trading. And if you don't want to increase your risk, you can just put a small stop loss of 30 pips. And you have to make sure that the market will be on a sniper point. Like what we mean by sniper point is is at a point where you have chance of gaining that market than losing it. Do you understand? The market will be at a sniper point. Don't do it where you place it and your risk is still increased. No, but sometimes I do this thing like some of the times. I may just see a very good opportunity, then I will increase my expectation, my return, but I will never increase my risk. So it should not work. Let it stop too. But I've seen something that if this move, I will make like 200 pips. But I'll put my stop loss maybe 40 pips, which is like maybe 40. If it's on one lot, which is like about $40. But remember, I may be different from you because I'm not trading an account of 1,000. Even if I'm trading an account of 10,000, I can put $40. Or you know what I mean? But on that note, I've considered what I call sniper point. Look at sniper, so that some of you may not be confused about what we mean by sniping point. So sniping point is the lowest low of the market. Let me know whether there's any current sniping point in the market in any of these instruments. This is like example of sniper point, but it's not 100% example. Here, you see here, it's like example of sniper, but this is a perfect example of sniper point. You see here. Do you understand? It's a perfect example. Kind of, you see here, the lowest point of the chart, and the market is very much volatile, or that has gone high and just at the lowest. Like US here now is like a support point, which is called that sniping point I told you, like the lowest or the highest point of it. Those people that used to do scalping, they should know much about sniping entry. So if I hit this market does not have sniping entry, let me check this one. Okay, we are already on this one. Let me check. So if peradventure I'm able to hit that thread there and place it at that particular point, I have more chances of gaining it. Then on that note, I can put a stop loss, very much lower stop loss, because my volume is big, but my risk will never be increased. Because I'm targeting to cash out big money, and you know what I mean? And I don't want to increase my risk.
Sir.
I'm with you. What is the question?
What about where you think is sniper points? You enter, it seems still begin go down.
That's why I put a small closer stop loss, because since my volume is big. If it's a sniper point, I put. But if it's a sniper point and I'm not increasing my volume, my return, I will do appropriately based on the market price action. I put my stop loss on the market movement.
Okay.
Yeah, so I put it, for example, market that's extremely low, and you know that the average of that market is 400 to 500 pips. You just have to know this thing. Any market you want to trade, even if it's not this instrument you're using to teach you, any market you want to trade, ask yourself the question, waiting by the average. So you could scroll down those charts, maybe put it on weekly or daily. Try to go back, you know what I mean? Try to know at what point does it always go up or down, like, you know, like the major reversal. That's what is called price action movement or average movement. Yes, you know, what is likely, because no matter the economy of any country, there's always a point buyers like to buy, a point by sellers want to sell, those major points. So now, if the price you want to sell is at those major area, it should know that it may never go down more up to 400 because of it never go down like that for a long time. So it means that anytime the market, okay, let me give you an instance. Oil price, once oil price hits 700 pips, it's most likely going to reverse. That's based on observation, because we are monitoring the market. But before the pandemic, if oil price goes to 200 pips, it most likely it will reverse. But since pandemic, it can go 400. 700. It can go, sorry, it can go 500, 700, 500, 700. Now, from 400, I will never be thinking of buying the market. Assuming I'm buying, the price of oil is going up. When it get up to 400, 500, I will never be thinking of buying it again, because you know what I mean. But when it's also around 200 or what, or 200 or 300 or 150, I may consider more. For example, let me show you. Now, I went on weekly so that you could see. I think someone just joined us, or somebody left. So I went on weekly so that you can see what I'm saying. This is 2023, for example. Check here. This is not giving me the PIP value. It's giving to me in this thing, in decimal point. But if I'm on MT5, it gives me the same thing. Okay, let me check it on price. See, from 73 to 85. Okay, let's say from 73 to 83 is 1,000 pip. For example, here, $73 to average of 83, which is somewhere here. Yeah, it's about 1,000 pips. Do you understand?
Yes, sir.
Now, highest is here, 96. And the market never, since the price of oil hit 96, it has never gone there again. So it has always been, the second highest was 89. Okay, 92. And for a very long time, it has not. So market has been ranging from 70 to 80, or like highest 1,000. And it's not all the time that it must hit 1,000. That's why we talk on average of 700. So every time I see the market hitting 700 pips, I will change my direction. Why do we keep talking of buy? For example, this market came from here, from 86 down to 71 or 70. So from 86 to 76, that is 1,000 people, right? But now it's at 70. Now, that's why we're emphasizing that it has chances of going more up. At least, even if it's gonna go to 70, which is 700 pips, or it might go to 80 or 81. Because that has been the movement. If you check for over 2 years now, that has been the movement. You hardly see oil going like 200 bits and reverse. No. So forget about these things we are seeing here. We're not talking about all this consolidation. Because of, if you follow this type of trade, all this small up and down, you may end up losing money. But the consolidation can work. But if you want to hit it big, like you want to place a trade that you can make more profit, you use those parameters. Now, for example, since the market never hit 60, the market goes average 700 pips or 800 pips. What to make you think that if you place a trade now, maybe a buy here, that the market will go against you 700 pips, like going down to $50 per barrel, or yeah, maybe going down to maybe $62 per barrel. Unless there's a serious economic issue that will crash it back, because it is still at the lowest. This is the time where we say that oil is at the lowest, because this is how it has been traded. Then if you check WTI, it's at 70. Check the movement where it came down from and where it rises. You see that when you check all this movement here, it's also between that 700 pips to 500 average, then it will reverse. The highest so far is always 1,000, which is not all the time. Because if you calculate them from here to here based on price, 67 to 77. So it's not something that has gone more than 1,000 pip reversing. That's why we draw our average to 700. So on that note, when I want to make a trade, and I'm trying to answer your question very clearly, promise. And I see this thread here. Remember, it's not all the time that you will see it. I see this thread here or here. Those of us with us last week saw it there. And we place a buy. So even if I put my stop loss 50 pips, I have chances of gaining it more than losing it. Do you understand?
Yes, sir. Because
it's just at the lowest. So on that note, sometimes you can increase your volume, but don't increase your loss, your risk. Then I don't know if some of you have noticed something of recent. The market has been ranging within this point. Now, as I got to this point now, today is going bearish, but the major supply is talking about bullish trend. No problem. Even though
so we can't hear you.
You can hear me again?
I can hear you, sir.
Probably
I can hear you. I think it's for me.
It's
I
from
Can
me.
you?
Okay.
At a point. I don't hear you.
Okay. So now, even if this market drop down to this point to 66, good, we will buy again. Now, at this point, to tell me how possible we will lose, we have less chance of losing than gaining. Do you understand? That's why I said the first thing you need to consider is the price. Second one is buying low and sell high. What is the third one?
Observe support and resistance.
Perfect. So you see that some of these things are coherent in nature. They're coherent in nature. So you see that of course, we know what is called support. Let me use this chart, for example, because support is support everywhere. Here is support. For a short time, here is resistance. Remember, I said for a short time. Here is support, here is resistance. Do you understand? Now, the market is towards this let's say is currently here, and it came down, and it's coming down, but this may be retracement. Now, what this means is that if this point is what you consider as resistance at this point now, which is on a short range, selling at 71 or 72 is considered a very good point to sell on a short movement. I say short movement because of what is happening currently. Look at it. Do you understand? On a short movement. So 71, 72, or when it's 71, it's not exactly 71. It could be 71.50 or 71.60. You know what I mean? 72 must not be 72. It could be below 7. It could be within that range because the price must not touch that point. Do you understand? So now, when you place a sell at this point, using your volume, remember your volume is very much important. And you could put your stop loss, maybe, even if you put your stop loss at 74, which is 200 pips, and the market has not gotten there for now. 74, and you're using 0.02. No, on $1,000
Sir,
account, you
please, your volume went low.
I can hear you very clear. Is my volume low there with other people?
It's okay. I can hear you clearly.
The volume
I
has
can
been
hear
okay.
you.
Okay. So now, and you're using 0.01.
Sir, it's not okay, please. It went low.
It's from your phone because other people can hear me.
Maybe you should try log out and log in again.
Other people can hear me. So if all of you can hear me, I would have believed that. So, and you're using 0.01. So you're targeting only 20%, only 2% loss. And now you are also on a good advantage on the sell. Three things. You have seen that the price movement is okay for you. You are selling at a higher price, and the stop and you are using support and resistance point, or you're selling at a resistance point. So you are of more advantage. So on this note, it can be difficult for you to go below or go above your drop down. It can be difficult. And remember, the market is very high volatile. So that market may drop 30 or 40 or 50 pips within that day or within 2 days. Then you cash out and expect another one. Then similarly, when the market is down within this point, assuming the market is trading within this point, then you meet it within this point. For example, it's coming down now. Let's say this market keep coming down within this point. This point is another support, and you place a buy here. So you are now using 3 factors. The price is low based on the price action movement. Of course, it's also a lower price from what the market is trending, and you are buying at a support level. Then your volume is also low. I think it's like somebody just placed a trade. Now on this factor, you are applying a very effective risk management. Do you understand? Because a lot of support and resistance works in the market. In every market, it always works. The same way a lot of breakout works. A lot of support can only be support and resistance can only not work if there's a breakout. Meaning that level is broken, and anything can happen that can happen for you to break could be potentially fundamental that is too strong. Then the investors will shift their buying and selling price because maybe economy is good. Then what is the last one I said?
Demand and supply.
Oh, okay, demand and supply zone. Yeah.
But that's not the last two.
Okay. Okay, yeah. Last one is indicator.
That's why.
Demand and supply zone. Let me get a practical example of demand and supply zone. Because not every market will suit your strategy.
Okay.
Just take note. Like me, I don't trade out the market. Not every market suits my strategy. So when you open a trade, you check a strategy that suits you check a market that suits your strategy. I mean, when you open a chart, if the market does not suit your strategy, you leave it. Example of market that does not suit my strategy is US card. You see, this thing is not my strategy. If I follow it, I will lose money. So you can use it to be strategy, but to me, it's not my strategy. There are people that like to use it as a strategy. I will have people that use it as a strategy. Now, this is one of my best strategy in trading, a market like this. That gave me a very clarity of zones. It's my best strategy. Or a market that's like this on oil. That give me a very clarity of zone. Do you understand? Now, that zone is within this point is good. And within this point is good. For me, it's clear for me to understand it. But you see this one, it means the market since September is going one direction, meaning that dollar is just dominating. People are not planning to sell maybe their dollar to Canada. Now, since I did not meet it at this point, you see why it's not my strategy. Since I did not meet it at this point, you know what I mean? Then, and this point is got broken. So this point also, which is here, also got broken, and I did not meet it. I have to pursue the market because it has happened to me in the past where you place your buy here. Immediately you place your buy, then that will be when the market will reverse. Do you understand why? Why it's not my strategy? So it does not give me clarity. Let me know where buyers are buying, where sellers are selling. It means that this market is only one direction, and I've missed the point of breakout. So for me, it's not my strategy. My mentor uses it, but my mind does not allow that kind of trade because I may keep buying now. Before you know what's happening, only for them to tell me that the market was watching me, waiting for me to enter. Immediately I placed the buy, then it will not reverse. So that's why it's not my strategy at all. If I miss those points, then I forget it. But this one is my strategy. You see, you see this one. This chart, it looks like my strategy. I like it. It's easier for me to understand it. I was using oil. Oil is my strategy. Is it this one that look like my strategy? Do you understand?
Yeah, it's clear.
Like we have our fundamental guy. He's very good in fundamental. So his strategy is not my strategy, but I make more profit than him. But he make more analysis than me.
Wow, that's interesting.
Yeah, he makes more analysis than me, but I make more profit than him. So now, this is my strategy. Demand zone, it means those points that the market have constantly reversed. It has formed a zone. For me, it's easier for me to understand that one. I could just say that this price is the price buyers like to buy oil. And this is the price sellers want to sell oil. How? Because that is the price it's always reversed. Irrespective of hundreds of news that are happening in the oil, hundreds of events in Middle East or whatever, this has always been the reversal point, and it has given me insight. This is the price. This market come down. This is the zone. It comes down. This is the zone. It goes up. Do you understand? Now, applying my risk management, I would like to buy. So I will never want to trade within this area. Let me mark it again. You see, within this area, I will never like to trade within this area. You see here, it's like pivot point center. Because I may place my first trade, then it will fall below. Then you know what I mean? And it may go up. It means that it's at a point of indecision. I would like to trade at the edge. That's my strategy. Find where buyers are buying, or find where sellers are selling. Now, using my risk management, tell me how possible it is for me to place a buy within this zone, a sell within this zone, and I will lose, because for a long time, this has been the performance. And if I place a buy within this zone, I have chances of gaining than losing. Then you can see that anytime the market hits this point, it hardly go further, maybe to 500 pips fall, or whatever. Since the average price movement of oil is about 500 to 700 pips, I told you that one before. Then, did you see how the information I give you is following one another? And because your analysis must cohere, it must have a coherent analysis. Don't use one source and you see that another source is countering your source. Do you understand?
Yes.
So the whole of them must tally. Then the last one I give you is indicator. I think.
Yes, indicator.
Technical indicator.
I wanted to teach you Fibonacci, but because of time, I won't teach you Fibonacci. I don't want to overload you to another one. I will give you Fibonacci retracement, but I've already analyzed Fibonacci. from mind. I know already for Fibonacci, but let me use this one we used last week to make our analysis. Let me get a practical example where is, yeah, perfect. This is technical indicator on a USD, JBP USD. And this indicator is stochastic oscillator. And it talks about low and high. This indicator, the law of this indicator is simple. It gives us the chance, the point of where we will buy and where we should. So it gives us the point of when the market is low and when the market is high. So now the environment is between 20 and 80. That's the environment, which is this point. Do you understand?
Yes.
So it means anytime this indicator is around 20, it will be showing you that the market is going oversold. So if the indicator broke this point and start hitting the environment of 20 to 0, it means extremely oversold. And you could see from the chart that the market is actually oversold. Here was previous support. Here is the current support. And the market is also currently trading at a support zone. Here is like a zone. So for me, you have chance of getting this market than losing it. Just even if it's not for short time, on a long time. And the market also fell from this point, this point, down to this point. So we see that some of things will support a lot of your analysis. Now, currently, this indicator is here. Let me not forget. Avoid being emotionally attached to one instrument, because some of you say, I trade only gold, I trade only this. So even when the market is not in line with analysis or in line with your strategy, you still want to, because you're already emotionally attached to it. Do you understand? That's one of the mistakes people usually make. Like during April, the Donald Trump election, we never encourage selling of Bitcoin pound. We ask people to keep eye more on buying. But only the election now, the market now came down to the point where it started rising again. Now it means it has created another opportunity for Bitcoin pound to rebound. Remember, you're trading a volatile and a high liquid asset. That liquidity in the British economy. So the economy is strong. Now, using this law of indicator, it has even passed zero. And it's on daily chart, not even on short-term, not even on a short-time analysis. Look at it. Kind of, it's on daily. See, this chart is on daily. And this indicator is oversold. And this market is at the lowest price. So, what do you think that is going to happen? Or most likely going to happen?
Push up.
Most likely buy.
Yeah. It's most likely going to buy. Now, when you're going to buy, remember our topic is not just analyzing the market, it's trying to manage the risk. When you are buying, you place a buy here. You can now consider the price movement. It fell from 1.3 to 1.2, and it's been ranging from 1.2 to 1.27, so 1.26 to 1.27. So even if you don't want it to keep a long time, because for this market to get to 1.3, it's not just 1 week trade though. You may place a trade for like 1 month or 2 months, which some of you will not be able to hold it to that left to that time. I know you want quick trade. But people that trade for a long time make more profit. So you could consider ranging from this point, which is here and here. And now, if you place this trade here, you put your stop loss below this particular support. For example, let's go into practical. Let's say I place a sell. Consider this amount to be $1,000. and I'm using 0.1. Sorry, I place a buy. My buy has been executed at this price. Now, this is my buy. There's something I want to remove on my screen to help me minimize this thing, but it's not allowing me to remove it. I want to remove something here. Okay. To save time, I will leave it. I will just explain it to you. You may do it by yourself. So this is my buy, and I'm using 0.10, which is like 10 cents in major brokers. Then if I put 200 pips loss, that would be $20, which is 2%. And I will try to check here. You check from here, check here, from here to here, which is 149. So that means I have to put it between 1.24 because I don't want my stop loss to hit 1.24. So I'm taking average 2.5% risk. So then that 5% risk, it means if this market eventually break this support, which support does not always easily break. That's one thing. One good thing about all this is not all the time the breakout happen. Breakout happen once in a while. Then I'm only risking 2.5% of my money because I'm using 0.01. And now, if the market go up to this point, which is 1.28, it's about 164. So I will gain about 1.6% profit. Fine, is whether, in fact, whether you are using that what is called risk reward ratio, this does not even matter, because I'm just trying to balance my risk. The risk I put on my stop loss is not necessarily that I want to lose it, but I just want to put it there. Now, but I have chances of gaining it. So even if I get 1% or 2%, I don't care. Because I'm not using like, I don't want to get maybe 5% to lose 2%. No, I just want to be on the safer side at all times. So even if I'm gaining 2 to 2% per each trade or 1.5% per each trade, then this market can shoot up tomorrow, even today, because of when the market just opened, maybe from Monday to Wednesday, it can shoot up to 200 pips, which is common. Market can go 200 pips as quick as possible. I will make 1.5% profit. Then I'll close it. Remember, I'm all on the safer side at all time using my small volume. This small volume looks small, but it's not small. You guys may think that it's small. Now, that 1.5% is about $15 profit on that single trade. Then I press another one. So if I multiply it times 2 or 3, I'll be hitting like $45 from now till Wednesday. Because of each trade give me that particular movement. Remember, market wave. So anytime the market wave within that point of my entry, I place another one until that point is broken. That's when I can only lose 2% profit. I mean 2% of my trade, because that's when there's a break. At that point is broken, the market goes down, hitting my stop loss. But there's another risk management strategy I want to also introduce to you. Sometimes, because of that breakout, let's say market breakout and about to cut me, that's why I will divide my volume, my ID volume into 2. I won't like to use all my volume into the trade. This analysis now, we're analyzing based on 2%. Even if we want me to analyze on 5% risk, we can also select a volume that can allow us to analyze on 5% risk on it. So I can divide my volume into 2. I've said that before. Instead of using 0.10, I can use 0.1, 0.5. I'll divide it. So if I have minus 200 pips, it's not even up to it's even my 1.something%. Then I will not be looking for another second opportunity using market analysis, because of there must be another opportunity where the market will go up. That opportunity can be when another support is formed. You know what I mean? Remember, I'm trading at a safer zone when another support is formed and the market started showing sign of uptrend, or it has formed that sniping point where this is almost the lowest. Then I will now use another loss size and place a trade there, then leave it. At the end of the day, I'm running the same circle of my risk. I'm not even hitting up to 10% loss, not even hitting up to 8%. At the end, I'm still trading. Even the market can go in worst case scenario, I may end up having 6% drop down instead of 10%. Any question?
Yes, I have a question.
Okay.
Are you emphasizing that every below or second or third rather average price movement before the above average price movement is a good area or place to take profits either in a bullish or bearish market?
Hi, ask that question again.
Like below or in a second or third average price movement before the above average price movement, is it a good area or place to take price, like take profit rather, either in a bullish or bearish market?
You cannot say below average price movement and bullish and bearish. I think I'm trying to understand your question. When price is going up, average side of people buying, whether it's a good place to take profit. When price is coming down, average price of people selling, whether it's a good place to take profit. Is it exactly what you want to ask?
Yeah.
Yeah,
Yes, sir.
perfect. Yeah, average. Yeah, don't take profit. Don't be the last to take profit. Being the last to leave the market, because the market will not hit that exact resistance.
Okay.
Yeah. So you can see from the chart movement. Let's see Euro USD. You know, all these points, them and the chart analysis. We are all reversal point. You know what I mean?
Yes.
You see this area, but you see that it's not all they're not just equal. You don't understand? Like, so I mean, it's not like market reverse here. You see that it's not the same equal. So market also reverse here. Market reverse here. So that's why it cannot be exact. Even here, market also reverse here.
Okay.
So that's why don't wait until you hit the previous or no, because it can get to that point and or will not even get to that point. So as a trader in between, you find your way to leave before those entry.
Okay.
For example, the euro market has sell sentiment, but there's what that happen in the market that the market can shoot up at any time. As having that sell sentiment, we can only validate this sell. People are analyzing when this support point is broken. Until it's broken, it will keep ranging from this price. And buyers who are buying will still be making profit. Imagine people that bought here since. Look at where the market is. It's a big price movement. They have made profit no matter whatever anybody is talking about. Selling. Yes, sell can happen, which is normal in the market. But retracement is also a strategy in the market.
Okay.
Yeah.
I also have another question.
Okay.
Regardless of what is happening in an economic, when you look at fundamental analysis, when you spot a zone on support or resistance, when there are opportunities and fundamental indicates something else against what you spot in the chart, what do I do? As you said, as you did say, that sometimes traders tend to follow what they want in the market rather than what is happening.
On my own side, if it's on oil, I follow fundamental on oil and I follow technical. Fundamental comes first before my technical in oil. But if you're telling me something at a low price, nothing will make me believe that fundamental.
Okay.
Yeah, nothing. If you like, let me with Donald Trump talking about it. If that price is low, I will not sell at that price. But
Okay.
in forex, technical control the market a bit because speculators plays a 90% role in the market.
Okay.
Yes. So people want to buy and sell, So that is why even if you see some news that happen in the market in the forex pair, it will form as if the thing just like gonna expand after a while, then it will compress. Market will still keep ranging because the bigger boys are the one that expanded it and let the speculators take over their market.
Okay.
Yes.
Thank
So it plays a major role. I don't know. Ask yourself, have I learned something? What have I considered now as a strategy I have learned? This will help you learn. Ask yourself a question to know if there's say one point you have taken over from here, or one thing you have mastered. Like I used to tell you, you may never master everything at the same time. It's one after another. Has anyone learned anything? Tell me what you just observed. I think I have to take some minutes of your time. I spent 2 hours. I will let's take maybe 10 minutes of your time, please, because I want to know. I want to give you market analysis. So has anyone learned something?
Yes, like what happened to me last week that my account got disabled. And yes, like what I from your teachings just now about risk management, that maybe I didn't have the experience or I never knew to do it. Like I when I was making profits, when I was on profit over like $100, I didn't move my stop loss, to just cut off the risks, and I just thought that maybe it will just keep going based on the analysis that you have given us, and I saw that I didn't mean I've moved my stop loss, like, because most of the other trades, that is the screenshot I sent to you, I was just closing the positions that I hold. I think that the profits are okay, but at that particular trade that I lost, that made it went the other way, I just thought to leave it open and see how it goes, but I never had the experience to like be moving my stop loss or maybe just take the profits because of like you said that having a target is very important. Like when you want to take having a plan when you want to take profits is very important to minimize your risks, something like that.
Okay, so that means you have learned something to correct it in the future.
Yes, sir.
Yeah, because that's why when we give those funds, and since we know that any fund provider, we have a very we always have a stop out. Even you, if you put your own real money, you have a stop out, which is stop loss. So we want to teach you how you can be able to trade within the risk management zone, and without having that stop out. Which contact is yours among the one on the platform? I'm lost. What do you mean by contact?
I think the person is asking for your direct contact among all the admins.
We have a company contact because this is like a proper customer service. My personal contact is family and friend, like my girlfriend, my girl, and my mother. Is it what you're looking for? But if it's a business, it's
So you never married?
No. I don't believe in those things.
Hello?
No, I don't really believe in those things.
Hello, I have a question.
Okay, go ahead.
Sorry, I joined the class late, a bit late.
Okay, that's Ibrahim.
Ruben, yes.
Ibrahim Ruben, I don't have you on my list.
I'm not on the list.
Maybe I can't remember. I'm not on it. Just go ahead. You have already joined.
Anyway, this is the first time I'm joining the meeting.
That means you didn't pay for this class.
That's what I'm trying to ask. I don't have much.
Okay, we don't catch you now, so you have to pay us.
No, it's okay. It's just that I don't know how. I don't know the details.
Yeah, no, go ahead, ask a question.
It's about the funding. I want to know the processes.
No, just pay us. I don't have. Are you on our WhatsApp?
I am on WhatsApp.
Send our sales manager the WhatsApp contact. We will send you our link. We have a website anyway. If you want to pay for our website, then if you are paying for our training, no, don't get it wrong. So when we pay for our training, we are providing fund for people we are teaching, so that they will use it. They will use that fund to start instead of using demo or fund using their own account, so that you don't need to start raising money again for trading capital.
Okay, so after the registration, it will be funded.
Yes, yeah, you fund it based on how much you register. If you register for 6 months, you get about $3,000 capital. If you register for like 1 year mentorship, you could get about $10,000 capital to start. If you register for 1 month mentorship, you get about $1,000. We call it mentorship because training is not really the thing. Somebody can use 1 week to teach you training, but mentorship is where the major work is done. That's what we call it mentorship.
Okay.
Yeah. So let me know if I can get you the WhatsApp number. Or the link. Let me check. I'm opening their website to get it for you. If you WhatsApp that number, will give you. They give you the account to pay or how to register anyway. If you're using cryptocurrency or card or stuff like that.
Yeah. I trade forex and crypto.
We don't necessarily teach on crypto. Yeah, we teach mostly on forex. Crypto does not need strong education because we don't teach people how to trade crypto. They don't make profit. They may end up losing money. So we only teach you how to invest in crypto, like buy and hold.
Okay.
Yeah. Do you understand? So
yeah, I'm more interested in the forex.
Yeah, so buy and hold more because crypto is underworld currency, so nothing to trade on it, because there's no fundamental, no tangible thing backing it. It could be one boy in Lekki that owns the crypto with his boys in Miami and Dubai. One day they can dump it and they lost all your money, or the whole analysis we collapse. Do you understand?
Yes.
So, but you can just buy and hold. When the price goes up, there you sell off. It's as simple as that. So
okay.
Yeah, that's why we don't have strong teaching on crypto. It doesn't work teaching anyway.
All right.
WhatsApp this number. They are faster in response. We also have our Nigerian contact too. This is not Nigeria, but this is the fastest contact you can get quickly on response. Yeah.
So immediately I register, I get funded immediately.
Yeah, within 1 hour or 2 hours. Yeah, we get funded. Yeah.
Okay. I have a question, sir.
Okay, go ahead.
Between these two time frames, there is the daily time frame and the weekly time frame. Like what's the major difference and how is it beneficial in their own terms?
One, it has to give you long time direction. Okay, not just long time. It has to give you the exact direction where the market is going. So weekly and daily, they look similar. They are not much. The difference is not much. Yeah, but it helps to give you a very clear analysis, clear direction, because no market is based on demand and supply. Where there are more, okay, I'm opening something, but I'm so shocked that my analysis is working. Let me show you what I'm opening. So where there is more, when there is more demand, the market goes that direction. Do you understand?
Yes.
So I'm so angry with this system I'm using today. it's not really allowing me to do what I want. So now, so because of that, we emphasize more using, we emphasize more on using a long time frame because short time can give you short direction for sell, while on a long range, you may not know that the market is actually dominated by buyers.
Okay.
Yeah. So that's the thing. Like on Wednesday, we are going to start deal more. Can you see my screen now?
Yes, sir.
So if you check this market, I put it back on monthly, for example. This monthly time frame, it's 1 month. Then you see that the area we mark. I don't know who was on class on Tuesday last week. We mark support and resistance zone. Do you see that they're all on the same? Because I wouldn't change anything. I just switch it to monthly, and it also pointed support and resistance zone. Then you see that in the whole month, they're also telling you the area this market, the price this market reverses, and the price this market goes up. This for how many months? Each candlestick counts for 1 month. If you count for how many months now, then they will tell you the area this market is reversing. Now it's also at that support point. This market is at that support point this December, and until this support point is broken, take note. People that are selling Euro US, take note. Until this support point is broken, our analysis is still valid. It is when there's a breakout. It means when support is broken, it means the market may not come more down. But now it's not broken. It is within that zone.
Okay.
Do you understand? So when it's breaking, we may tell you, oh, bros, this analysis.
So what about USD card?
USD card is going up. We are analyzing to drop here, but
I'm on the trade though. Should I close it?
What of a buyer? Your risk. What risk are you taking?
200 pip. Then I'm at 80 pip lost.
Then what is your volume?
I use the lowest loss size, 0.01. The lowest loss size.
That means if you're losing about, is it not up to $8, right?
Yes. If you hit stop loss, I will lose $20.
Oh, that's 2%.
Yes, 2%.
No, leave it.
Okay, sir.
Do you know why I say should leave it? Because it's trading within your risk, just that it's on a long time. So there will be another point of entry, which we will let you know. But now there's no point of entry here.
Okay, sir.
Yeah. So leave it. So this thing is not sniping entry. Do you know why we say it's not sniping? It's a small candlestick. Sniping entry means like something that's like this. Do you understand?
Sir.
So if we see something big, I think it was here that we asked you to sell. It was here.
Yes.
We saw this thing thinking that it would drop. Then it dropped a bit. Then I see continue going up. There's no sniping, but it will definitely form sniping. And as long as the market is trading within your risk, you're not at any issue because the next market will recover that loss. Definitely.
Okay.
So we are monitoring Canada. We are monitoring it. Once we have opportunity for people to sell, they will let you know. But for buying, we're not negotiating any buying for anything on Canada. I don't know. Let me even check it on daily to see. You guys are exceeding your time on this 15 minutes. Are you not going to work? Okay. Now, see on a monthly chart, it's always hitting this particular support. So just relax. Something will happen in Canada that the economy will bounce back. So it's already at the higher side. You have chance of getting more. What we have to do, we'll try to know whether we could maybe place another sale, but not now.
Okay, sir.
Yeah.
But sir, the stop loss that is at 200 pips, is it okay?
It's 2%. Unless if it's not okay by you. I told you ideally, what will you want to have? Like your appetite. For me, 2% risk is fine. It's okay for me in any trade I'm placing. This is what will make me, I can trade without losing my capital. Whether it's my own money or somebody's money, I will never lose it. Then, if you also check on Canada, look at another information we also having. Canada is also overbought.
Overbought.
Yes, it shows that the price is high. It's overbought. So any moment it will drop. The next movement of Canada is to drop. Then on the chart that is high. So just relax. It will definitely drop. Definitely to drop. Then when it's dropping, we could place another trade. Maybe we could add 1% return, making it 3%. So that if it's returning, that the one that's gaining will be gaining from top. You know what I mean? While the one that is at negative will be reducing. So by the time it goes, make sure you chat us so that we can tell you what to do. Or if you want to recover it on another pair, we can use another pair to recover it. Do you understand? So we have to check the chart and see the point where we enter the market and you'll be able to gain something big. Did anyone learn anything?
Yes, I
Yes,
do.
sir.
So are you
guys
guys confident in trading now?
Yes,
a
sir.
little bit, sir, because before I will if I analyze markets, if I enter, then the market will hit my stop loss and begin go to my direction. So it has happened several times, and not one, not two. So, but I don't know that it's because my stop loss is maybe 80 pip, at times 50 pip. So when you say we should take stop loss to 200 pip or 300 pip, the first day I entered the this Zoom meeting, said we should take our stop loss 200. So I now learned that is where my fault is.
Yes. Why would? But do you know why I say you should take stop loss 200 or 300 reps? So you need to know the reason why I say so.
Yes, because, so that because he said the market will not go get there in case if there is any spike or any news, it will not take me out.
No, that's not the major reason. The major reason is that after observing the average movement, where it usually go, the average is usually reverse either up or down. So we use those average to set up our stop loss. For example, putting a stop loss on oil on 200 pips, it may hit, but oil can easily go stop loss because of based on how oil has been moving. But on the CARCHEF, if you check it, average is 150. So if you put a stop loss of 200, you just go and relax. You may even travel because it has chances of not getting there, unless if market pattern change. Because market can change, market pattern can change. So that's the majority. That's why I told you. First thing you observe average movement. Or if you want to go and do the assignment on a chart analysis. Try to know. Use maybe 2 or 3 instruments. I don't want to mention instruments. Try to spot out what has been the average height and average low for the past 1 year. Like this is December, from January to December. So if you want to do that, you can put it on weekly chart. And then now start going down, pointing at average high and low with the point. So get them for the past 1 year on a particular instrument. This will help you know, okay, this market reverses within this point. Then you are trying to use practical way to know price movement. Then anytime you're trading that market, you know that this point is always where buyers like to buy and where sellers like to sell. Then you put your stop loss using those ranges. So now what I'm saying now, if that market, they go up to 500 pips before reversing, and you're trading on, you like to use big lot size, you have to reduce it, because since this market can hit 500 at a roll, it's too volatile. So you can now reduce your volume. Do you understand? So that your volume will be in line with the market trend. So even if market goes up to 500, you see that you still never lose 10% of your capital.
Okay, sir.
Do you understand? And you know that it goes in your favor. You'll be cashing up to 500 pips profit. That's how you can manage your risk. properly. Once you observe it, then you reduce your risk. This is why in oil, we try to reduce our volume, because we know that oil can go long time. So no, if we use 10 lot, if this thing goes 700, if anything happen, it goes 700 against us. That means a big profit. Let's divide this lot. Do you understand? So that's why we need to divide our lot. They reduce it more. Then the same way, if it's going in a positive direction, fine. But what will make it to be more profitable is you are trading at areas you have chances of making more profit. Do you understand? So we may not give you analysis again here, but check before in our chat. Anytime we mark something and post it on the group, know that we are suggesting buying and selling some areas. Do you understand? For example, okay, if we mark something like this, just know that we are emphasizing that, or then we mark something like this. Just know that we are emphasizing that buying will continue and it may get to this point.
Okay, sir.
Okay, I was seeing this thing. I'll now say, what are these actually? Okay, now I understand.
Do you understand? So we do it because of people on that chat. They are not paying. Some of them have not paid, so they don't know the code we're using. So we don't want to give them signal. Do you understand? And we don't want to tell them where to buy on and where to sell. For example, we may mark something like this, and when we mark it, you know that we are giving you a sign of resistance. You don't understand? We are giving you a sign of resistance. So if we mark it on top like this, then mark maybe somewhere here. You know that we're expecting something from here to here. Do you understand?
Yes.
So then if you are confused, quickly chat us because of once you chat us, we'll tell you exactly what you're expecting in the market. Yes.
But Mr. Uche,
okay.
I don't want to suggest. I don't know. It looks like there is no group, there is no platform for only paid students, so that when you place chat like this and want to engage the chat, we can just fully engage instead of reaching out to the people who are. I just feel like
no, we don't have a paid chat for it because we have how many staff? We have 1, 2, 3. We have only 3 staff working actively, and they have a large number of clients they are assisting. So that's why we are trying to employ more. Then we don't have a paid one, and also the ones in the group are also the one paying. Some of them want to observe what we are doing, whether it's fine, you know what I mean, before they come in. So that's one of these. So we don't have a paid group where we move people to the paid one. So we only have one. You know, we are not many. We're just 200 and something on our Telegram now. So if our number keep increasing, then we create more group because we have already gotten students we are going to carry along for the year. Then we can separate them from people who are trying to join us. You know what I mean? So we don't have it now. I know that people used to have it, for now we don't have it. But we may have it. We have plan on having it anyway. Do you understand? So yes, there's no strong market we'll give to you. I'm checking out the market, except here we're expecting a sell on Canada. It has not triggered. Our buy here is still valid, so I'm trying to see. Our sell here have not triggered. We're expecting a sell since last week. We are pushing that this will drop unless if this small resistance is broken. Has not triggered. Well, of course, our buy here is valid, but it's this thing is not the volatility is weak. Today is Monday. Our buy in oil is still valid, but on a long run, our buy on oil is for a long time trend. We're expecting at least 83 or above 78 in oil. Even if he's 78, it's a big movement. From 73 to 78, it's a big movement. That's about 1,000 people. That's for a long movement. And look at it, oil. So we're expecting oil to shoot up. It has been going up, but not as we expected. we're expecting like something like this to happen. You know what I mean? Because OPEC has cut production and supply has also reduced. So we're expecting, and the price is very much low too. We're expecting it to go a bit up. So we'll be checking to know if the market reality will change. No one of you is trading natural gas. I'm not sure you can trade natural gas. So gold, gold, we don't have much to say on gold, except that gold will keep going up. Anytime gold come down, we want to buy more because gold has been up for a long time. So we are not seeing any chances of gold going down seriously, unless if it happened. Then you know that gold does not have direct fundamentals. I think you guys know gold doesn't have direct fundamentals. So I mean,
really?
yeah,
So I
it's
don't
like
know.
it's like crypto. I hardly see news on gold. So it's mostly technical and yeah. So what drive gold is when the economy is bad, gold goes up. When the economy is good, then gold come down. Because it's basically used for hedging. News does not really take us anything on gold. Gold is derived by other economic realities, so it doesn't have direct fundamentals. Like even miners, some of these miners, some of them are illegal. Then on the 10 pound USD, we're expecting a bullish. It has not triggered. Do you understand? We're expecting a bullish on Euro USD. We're expecting a bullish on Euro USD. But on a long time, where there's chances that it may drop further. That's why we said it's tentative. It's on two-way. So people that want to keep selling, if you are selling, we keep putting a closer stop loss, stop loss. Unless if you want to, keep putting a closer stop loss if you are selling on euro. But if your volume is not too high, don't consider it strong so that you won't hit stop loss while the market keep coming down. That's an analysis on euro. Until this thing is broken, that's when we will know that the sale has fully been confirmed. Now it has not been broken. Why we say euro USD said that the dollar is very much strong, but we expecting eurozone to react. If they react, then we cash out on euro. Me, I have a buy on euro. I have only one sell. So my mind is not strong on the sell based on my own analysis. But if anything changes, we will let you know. Do you understand? So
I want to ask a question.
Okay.
You said that before we trade, we should make a plan. So I want to know if there is any platform or app that calculates in pips, so that we can make a precise calculation before getting into any trade.
Yeah. During that, the MT4 web can give you pips. Look at what I wanted to do. There's something I want to show you here, but it's difficult for me. There are some platforms that can give you pips. For example, there's something I want to do here that is difficult for me here. For example, some of the platform I use will tell us how much profit we are to lose or gain.
My MT5 used to do it.
MT5, yeah. I'm also using MT5.
Yeah, so now kind of if you put a stop loss, it will give you the value even in dollar.
Yes, MT5 is doing that.
Yeah. The MT5 web does, but the one you download on your phone does not have that system. But some of our advanced platforms, I call them advanced because they have more features, helps it easily. So that kind of, if I told you target 200 pips, if you put 0.10 and target 200 pips, you already see the potential outcome, like in dollar value, that you will gain $20. Yes, so that's the platform that make it easier for you. But when you don't have it, if you're using the MT5 app, you just have to use ideally to target it, because you don't know that 0.1, which is 10 cents times 100, give you $10.
No, MT5 do it too.
Yeah, do it like that. It's easier for
MT5 do it.
So if you put it will show you the potential outcome automatically. Immediately you place the trade and want to target it, it shows you potential outcome. If you want to put your loss, it shows you potential loss. Those will also help yourself not to even hit your drop down. You know what I mean? For example, you place a trade and say that your drop down will be 10%. In case that thing, the market goes against you, you will avoid it. You stop it and trade within your drop down.
Okay, thank you, sir.
And again, we are trying to give you guys more better condition on our for the funded account we're providing to you, so that you won't have daily drop down. Then you have just only one condition, only one condition to trade. Do you understand? Then which other condition we want to give you? That's something we want to modify to just be easy for you guys to just trade and make profit and go. Yeah, we want to increase the drop down to 12% or more. Between 10 to 12% maximum. Then we want to remove daily drop down entirely. Then of course, we want to make sure that every account is real life account. We don't want the broker to cheat. So we are following their system to be sure that everything works out. So we don't want to remove some of the conditions. The fund is our fund. So we want it to be done on our own terms, not necessarily the brokerage terms.
Okay, that'll be very good. Thank you very much. That if you can remove that daily drawdown, that'll be okay. In fact, that'll be much.
We have discussed with them, because what is happening is that we are using their platform to provide fund. It's not that they are giving us fund. So we can deposit some amount of margin and connect it to the live account. So that's what we want. So it's not that we are trading on a fictitious figure. We're trading on STP connected to the liquidity. So you're making money from Liquidity Bank. So we want to remove some of the clauses so that let them not. You know what I mean. So maybe we're going to have a meeting again in 48 hours time with them. Then if they don't agree, we may consider using another platform to provide a fund.
So, sir, in my own case, like, what can I do to get another funded account?
We only have a slot. Are you the one that promised on Zoom that? Okay, yeah, you didn't have. Assuming you are on our 6-month program, but my own side give you a fund to continue trading. But I told my manager, if we're having a meeting, we'll have to present that thing to them so that they will know what they are doing. I won't talk about it anyway. So, I'm a brokerage official, so I know how this thing works. Just that it's not allowed for us to use our broker to provide you fund. So we don't really know. From what you see, that it doesn't have a verified drop down that's up to 9%. So if daily drop down is 6, it does not 6% loss. There should be something like that for us to believe that actually your trade close at drop down. You know what I mean? That should be there. If there's any drop down, it should show on the trading history. Then it's actually a drop down. Then if they are usually give widen margin at night, or most brokers usually widen their margin and leverage at night. Let it be that it's obviously like that. You know what I mean?
Yes, sir.
So they have to explain to us. Let us understand. I think this is where we stop for now. The meeting is recorded. We'll send you again. I don't know whether we should continue on the risk management class. Shall we continue more? Shall we have another class on it?
No, sir. No, sir.
No. Okay. Everything is well understood, right? So,
Sir, please, I've been asking the support for the past video. They said the video is not with them. So when they get it, they will send it.
It depends on the support you ask.
WhatsApp.
I ask directly. No, I ask us again. It's available. The one on Friday was available on Saturday. Yeah. So ask again today. It should be available. Then after like a couple of days, we'll now make it available on YouTube. Now by that time, but it will be available on YouTube later. I can hear you.
I have a question.
Okay.
What's the name of that indicator again?
Which indicator?
The one you use on analysis.
Currently, we're using only one stochastic oscillator. That's SO. The initial is SO. SO. You know that we don't want to bug with indicators. You want to give only 1 or 2. If you understand it, is better than when you have 10 and that become confusion in your head. So we will not do like that. Our training is simple. You just pick 1 or 2 things. As long as it's working for you, forget about whatever anybody is preaching on the internet. Focus on one that's working for you. If it's not working for you, then we will change another one. So that money making must be simple for you. Do you understand?
So I have a question.
Okay.
So regarding that SO indicator. So sometimes I don't know the actual time frame that is good to use that indicator, because sometimes if you put it on the daily time frame, the thing will be showing oversold. If you change the time frame to another time frame, it may tend to overbought, like the indicator keep changing concerning the time frame.
Yes, because of each market by each time has a range. Like a short time frame can show you that the market has gone oversold or overbought on a short time. But on a long time, it shows that there's more potential in a particular direction. Do you understand? So now, because of short time frame does not really give a guideline of a market condition, and like proper guideline, we try to ask you to avoid using it on short time frames. Use it more on a long time frame. Do you understand? So to avoid that confusion, use it more on daily time frame, more, or at least minimum 4 hours. So don't go on low time frames, because each time frame will show you the current happenings. Have you not seen where you put 1 minute chart before you know what's happening? You see a long candlestick. But if you go on 1 hour or 2 hours or 1 day, you see that it's just a small movement. But the candlestick, small time frame will show you as if something big is happening in the market or nothing is happening. That's also why we focus more on the price. Price matters more than the candlestick.
I don't understand.
Yeah. So I have to let you guys go. If you keep staying here, I'll keep delaying more of your time. So if you have any question, please feel free to chat us on WhatsApp. Tomorrow we'll have a class on oil fundamentals. On Thursday, Wednesday we have on data, macroeconomic analysis and data analysis. You need it more. If you check our website, data analysis is there. That's why we put that course there. You need to know how to get data to arrive at the calculation. So you need that course seriously. Once you understand how to extract data, it's easier for you to know where the market is going. Then you know what to be doing at all time. Then on Thursday, we discuss about investment banking, how you can raise more capital and start trading. So it's a very important course for those of us that want to become a big boy in trading, become a trader. You know what I mean? I want to scale from your personal trading to where you enlarge it. You need all this plan and all this arrangement. We have that one on Thursday. But before then, be checking the page. We'll be pushing you up with the analysis, telling you what to do. This week we have oil. We are trading oil. We still have a lot of fundamentals. I check on Forest Factory, but because of time, we are not going deep into it again. So we will leave you for now to go and continue your daily activities. And see you guys tomorrow. And in case you didn't join tomorrow, we still keep the recorded version for you. Then you can now ask questions. Remember, you have right to ask for review. You can book a session either with me or with someone else to review what you have watched, or you put us on a WhatsApp chat so that you know what I mean. So when you review those things, you can ask questions. Okay. So have a lovely day, all of you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you.